All right, what's up, guys? This is going to be a little video on my model called the DISC model. It's so simple to use. The reason I call it DISC model is just short for discretionary because this isn't really it's not a mechanical model. Like, this can't be something you just you do. No, like, this is something that you have to backtest for a year's worth of data to really understand how all of these concepts work. There's not a lot of concepts in this. I'm going to go into it right now, but this is for me, this has been an amazing way to trade prop firms for me. And all right, I'm yapping right now. Let me just get into it. All right, so the first thing is to understand that price does two things only, which is offer fair value and seek liquidity. So price moves from IRL to ERL or from ERL to IRL. So let me show you guys what I mean by that right now. All right, so let's draw this out right here. Let's just do that. So let's say we have a large leg down right here, right? Now, let me draw this out for you guys real quick. Let me move this. All right, so we have a large leg down, create a fair value gap in the middle, right? This is going to be your IRL, internal range liquidity, right? So what price wants to do right now, right? So we're already in a downtrend, right? We create this fair value gap in this downtrend. So now let's say price retraces into this imbalance, into this IRL. Now, where does price want to move? Down to this ERL right here. So this would be your external range liquidity down here. So price moves from IRL to ERL. So what we would expect to happen in this fair value gap, let's just say this is a 4-hour fair value gap, right? We can expect price to reject off this level and ultimately move lower down to this ERL right here. All right. All right, so this is the first example, right? This is simple IRL to ERL. Fair value gap to external range liquidity, right? This could be London low, previous day's low, whatever. It could be this works on any time frame, by the way. Let's just say this is a 4-hour because we're really looking at the higher time frames first, trying to find the narrative of bias, all that. All right, so now let's do an opposite example. We have the same leg down, right? Let's say it looks something like that, right? Same thing. Fair value gap in the middle right here. So now let's say, all right, so price retraces into this internal range liquidity, this IRL, but instead of respecting this level, we disrespect it, creating an inverse fair value gap, right? When we disrespect this. And now price isn't going to target this external range liquidity. Price is failing to offer fair value. So now we're going to seek the opposing liquidity, which would be all the way up here. So it looks something like that, right? Price fails to offer fair value, so we're going to seek the opposing liquidity, or price offers fair value and it respects the fair value gap, and then it seeks the external range liquidity in the current order flow like that it's in, right? All right, so that's that. All right, so for this model, what's important, very important, is to understand the higher time frames. So we're looking at the weekly, the daily, the 4-hour to understand where the market could possibly move to. And we want a strong draw liquidity. We're not trading to unfilled 15-minute, unfilled 5-minute gaps. No, we want a strong draw liquidity. So I'm going to go into it further, but I have a checklist on the next slide, I think, for that. Then we have a narrative, which is framing your trade out of fair value gaps and swing points. So that could be like 15-minute, 5-minute, 3-minute, something like that. And then entry, which I'll go into it later. So understanding the higher time frame. So order flow and candlestick logic. All right, so let me just show you guys right now. So this was I already kind of went into it right here, but let's say this is 4-hour bearish order flow, right? Then we have this IRL right here, move to the ERL. That'll be your order flow. So order flow is just higher time frame fair value gaps. So daily, weekly, 4-hour, hourly. That's order flow right there. Those fair value gaps. Fuck. All right. And candlestick logic. All right, this is a big one. Let me delete all this crap right here. All right, deleted all that. All right, so candlestick logic. So now let's say price is just moving like this, right? And we have this high up here, right? Candlestick logic. So let's say we go up to this high. Now let's say this is previous day's high, right? This is a strong key level. Now we want to see what price does at this level. Is price going to run this level to move higher to the next draw on liquidities that could be above this, or is price gonna reject this level to then move lower? Right, so that's very important. So at key levels like session highs, previous day highs, data highs, data lows, right? This can be very important. Like you want to see how price reacts at this level. And again, this is on like the 4-hour, daily, hourly, so all your high time frames. All right, now very important. This is the most important part of this model is having a strong draw on liquidity. So that's session highs and lows. So Asia and London, and I wrote down the times right here. So make sure these are very important times for you to mark out the highs and lows of these times every single day before you even think about placing a trade, right? You need to know where these draw on liquidities are. Previous day highs and lows, previous week highs and lows, 4-hour daily weekly swing highs and lows, 4-hour daily weekly unfilled fair value gaps, new day opening gap, new week opening gap, data highs and lows, trend ending equal highs and lows, and then swing equal highs and lows. Sorry, so we have that. Now, after you have your strong draw on liquidity, you're going to want a 5 or 15-minute fair value gap, or like a 15-minute swing high, swing low that we disrespect or respect, right? I'm going to go into this later, but you just want to frame your trade out of a 5 or 15-minute fair value gap or swing point. I'll show you guys what that means later with some examples. And then entry, so impulse shift, it's a fair value gap, and once we retrace into that fair value gap, you would enter right there, right? So, or like setting a limit order at a fair value gap. I'm going to go into that later. Inverse fair value gap and candle confirmation. All right, so now let's get into some examples. I've been yapping for like 5-10 minutes now. All right, so here's an example I marked out. All right, so what are we doing first? So we're starting on the daily time frame, the highest time frame, seeing what are we doing on the daily. All right, so we know we have a daily fair value gap up here, so we're going to mark that out. So we have a daily gap up here, and then we have, well, this is also previous day's high, previous day's low. All right, now let's go on the 4-hour. Let's see if we have any fair value gaps on the 4-hour. So I already marked this one out. So in this current order flow like that we're in, swing high to swing low, we have a 4-hour fair value gap right here. So what would we would expect to happen is to come into this 4-hour gap, respect this fair value to then move higher to this external range liquidity, previous day's high, or this unfilled daily fair value gap. All right. So, and again, this is at 9:29. So this is a minute before open, right? So this would be like a live trading day for you guys, if I could say that. All right, now we're gonna go on the hourly time frame. Let's find our session highs and lows. So London low already got ran through, right? London high already got ran through. London high would be right here, 5 o'clock, already got taken. Asia high already got taken. So we're gonna mark out right here. We have London low. This is at 3 a.m. And then we have Asia low down here at 8 p.m. So we have London, Asia, and previous day's low right here. Do we have any 4-hour swing high or low? Right here. 4-hour swing low. Perfect. All right. So let's go down into the 15-minute. So we could already see we're creating these 15-minute gaps. So now let's see. We want to see if we can find a 5 or 15-minute entry towards these session lows first. That's going to be the first thing we do. So we have a 5-minute gap right here. Let's see if we get any retrace. Nope. So we get no 5 or 15-minute retracement right here, right? No 15-minute retrace, but we are forming 15-minute fair value gaps right here. So we had no entry towards these session lows. Now we're inside this 4-hour fair value gap, and it is currently 9:41. So what we're going to want to wait is to see if price is respecting this level, or if we disrespect this fair value gap to move lower to this 4-hour swing low down here, and ultimately previous day's low. So we're just going to let that play out. $9.59. All right, there we go. 10 o'clock. We disrespect this 4-hour gap, right? Let's go over here. 4-hour gap got disrespected, right? All right, so now we're forming this 15-minute gap. Possibly it'll form in 15 minutes. So let's see if we can form this 15-minute gap before taking out this 4-hour swing low. Fuck, I'm getting a call. Hold up. All right, so let's see if we can form this 15-minute gap over here. We have 13 minutes left. Could also check the 5-minute. No 5-minute retracement. Okay, we get a 5-minute retracement right here with 5 minutes left until this 15-minute candle closes, right? So are we going to want it? This is where we're going to use our discretion, right? Are we going to want to take a trade out of this 5-minute knowing that we're creating a 15-minute gap? No, right? We're going to wait for a 15-minute. We're going to wait for this 15-minute gap to form. Let's just go on a 5-minute. Let's see how this would play out. All right, so you have a 5-minute gap right there. Now let's see if we get this IFG and if this would actually play out. All right. There you go. Let's say you entered right here, right? You entered off this 5-minute, out of this 5-minute, and took this 1-minute IFG. Let's see if that would play out. Stop above the swing high, take profit at. You wouldn't even get a 1-to-1, so at that point it's not worth it. So you would just target previous day's low, right? Let's see. Did we take out that low? No, we didn't take out that low, so we're still good. And you would get stomped out. Why would you get stomped out? Because we created this 15-minute gap up here. A 15-minute gap is a way stronger magnet for price to draw to than a 5-minute gap. So let's go back onto the 15-minute. All right, there we go. We're retracing. Let's delete this 4-hour because we already know it got inversed. So we retrace into this 15-minute gap up here. Now we're going to dive into the 1-minute. We're going to see if there's any entry that we could possibly get here inside this 15-minute gap. All right, so what we see here is this 1-minute fair value gap, right? So what we could do here, we could wait for an IVG here. You could have also taken this candle confirmation entry, right? We had 2 strong displacing candles, 1, 2. You could have entered right here, but we do have this fair value gap right here that could push us higher. So what we're going to do is just wait to inverse it, and if we do, we take an entry. Got some rejection off that gap. Ultimately, we inverse it, right? So what we would do, enter right here, stop loss above the swing high, and we take profit at the 4-hour swing low. And with this, you would get a 1 to 2.9 R, so almost a 1 to 3 R, right? And again, we're taking anything over a 1 to 1 R. So IFG right here. Let's see if this would play out. Let me place the order. All right, let's say we go in 1 con. Why am I at a buy limit here? Hold up. What is this? All right, place order. All right, so we're risking 1%, so risk 500 to make 1,500, right? So save. All right, let's see if this would play out now. Let's see. All right, so we took out this 1 minute swing low, so we're going to go break even right here. I mean, look at that beautiful delivery, right? We had everything. So this trade, we literally had everything. This was a beautiful setup. Again, let's go down from top to bottom, right? So high time frame narrative, we're disrespecting this 4 hour gap to then move lower to this 4 hour swing low, ultimately previous day's low over here, right? That's our higher time frame narrative. Now we need a 5 or 15-minute narrative, right? So we have our bias, now we need our 5 or 15-minute narrative, right? We have this 15-minute gap right here that we retraced into. Now we're just looking for our entry function. Again, an IFEG was part of the entry function. You could have taken this candle confirmation entry, would have played out as well. Or this IFEG was a little safer, so that's what I took. And that's what you guys would all take by using this model, right? Just a beautiful, beautiful textbook setup. And it's just so simple. Like, there's really not much to it. Like, it checked off all the boxes on the checklist, right? Let's go back right here. Understand the higher time frames. We did with the 4 hour inverse, strong draw and liquidity, right? We had this 4 hour swing low, which was part of the strong draw and liquidities that I listed, right? 4 hour swing low. The narrative array out of a 5 or 15-minute gap, we had that, and the entry, IFEG, right? We literally had everything. So this was a beautiful trade right here. All right, so here's another one that I marked out. All right, so again, so let's start on the highest time frame. So daily. Well, usually we'd start on the weekly, right? Nothing on the weekly. Let's go to the daily. So what do we have? So we have this daily swing high over here, right? Price is in a bullish trend. We have this daily swing high up here for us to target, right? Because previous day's high was already taken, so we have this daily swing high up here. And we'll just mark out previous day's low as well. Let's go down to the 4 hour. All right, so what do we hear? What do we see here, right? We're understanding the higher time frame. So we're inside of this bullish 4 hour gap. And what do we expect to happen here? We expect this level to hold and price to push to this ERL and ultimately run this high to take out this daily swing high over here, right? So this is again at 9:29. So we're going to see what happens inside this 4 hour gap. Inverse this 15-minute gap at open. Now let's mark at our session highs, right? So we have London high up here. Asia high already got taken. And we have, and then we had Asia and London get taken overnight pretty much, right? Or taken over here. So we only have London high to target and this daily swing high. All right. Okay. So, all right. So let's just see how this plays out. Let me fix this. Right. So this first minute, this at market open, we literally just ripped straight up. Obviously, we're going to take out London high. Yup, that was pretty obvious. So what are we going to target next? Is this daily swing high up here. So first let's see if we're going to respect this level, right? We need to see if we're going to respect London high or if we're going to reverse it to go lower. So let's go back on the 15-minute. All right, so let's see. Maybe we have 3 minutes left until this candle closes. This 5 minute. All right. Okay. So we have this 5 minute gap right here with this daily swing high above us, right? Are we gonna respect this gap to move higher or disrespect it to then move lower down here, right? So let's see. So let's mark out this 5 minute gap. Go down to the 1 minute. All right, so let's see what happens here. Okay, well, we do have this 1 minute gap right here that we can take an IFG out of, right? Let's remember we're in this 5 minute gap. All right, so there we go. That's simple. This is an IFG and a candle confirmation entry as well. You could use either or, right? 3 strong displacement candles. And where do we want to target this daily swing high, right? Right there. Stop loss below. Obviously, we're not going to do the swing high because if the trade already goes down this low, the idea is pretty much fucked, you know? So we'll just head at the body of this first candle. The body of this first displacing candle. I'll be more accurate with that. And set it right there. So here again, we get a 1 to 2.9 R, right? So let's make sure we have everything on the checklist, right? We have our higher time frame narrative. We're respecting this 4-hour gap, right? So we want to move higher towards where these next drawn liquidities, this daily swing high, right? All right, so we have that. Now, do we have our strong drawn liquidity? Yes, this daily swing high. Do we have our 5 or 15-minute narrative? Yes, because we have this 5-minute gap right here. So that's our 5 or 15-minute narrative. And let's just dive into the 1 minute. We have our entry function, either this candle confirmation entry right here or IFG as well, because we inverse this gap, right? All right, so let me place this order. Fuck. Place order. All right, so same thing here. So we're risking 500 to make a little under 1500. All right, now let's see how this plays out. Oh, and we would go break even after we take out this high, right? This internal high, we would go break even. So let's move this stop to break even. And literally textbook example, 0 drawdown, just beautiful delivery. Again, had every single aspect of the checklist checked off, right? We had all of this, and that allowed us to take this beautiful trade, right? All right. New example right here, example number 3. Again, let's start on the weekly. All right, so here, what do we have in the weekly? Again, this was part of understanding high time frame narrative, right? Candlestick logic. We're disrespecting this high, right? Because we're not running this high. We're disrespecting it. We're reversing off this level right here, this weekly swing, this weekly high, previous week's high. Let me show you guys how that would look on like the daily. Right? We're disrespecting this high to move lower. So now let's mark out our draw liquidities. So obviously we have a bearish bias already, right? We want to move lower to previous day's low. Do we have anything on the 4-hour? So we are forming this 4-hour gap right here. But we are also inside this hourly, so we could mark this out right here. So this is a strong key level for us right here. If we're going to disrespect this hourly, which we looks like we already are doing. Okay. So we have London. No session lows because they were both taken, actually. All right, so we would have London high. That would be London high. No, this would be London high. And has Asia high got taken already? Asia high got taken over here, right? So no Asia high. So really all we have to target is previous day's low, right? That's really all we have to target. Oh, well, also this 4-hour swing low, I guess, right? The 4-hour swing low right here. Let's mark that out as well. So that's how we're drawing liquidities. All right, so let's see what happens at open. All right, no 5-minute gap either. All right, just not forming any 5 or 15-minute gap for us to frame a narrative out of, right? All right, so now let's see. We're so close to this draw, and let's see how this 5-minute gap closes, right? We're likely going to just take out this draw without retracing into this 5 minutes. So what can we do here, right? We're going to use our discretion. We're going to realize that a 5-minute retracement is just very unlikely. There is no 15-minute gap. So what are we going to do? We could go down. We'll see how this 3-minute works. So we get no 3-minute gap, right? It's a retracement all the way up here is just very unlikely because we're so close to these draws. So let's go on the 2-minute. Oh, what do we see here? We have a 2-minute retracement, right? So we could frame our trade out of this 2-minute, right? Instead of expecting price to move up to this 3-minute gap right here or this 5-minute gap up here, right? It's just very unlikely for price to retrace here when we're already so close to these draws. So now out of this 2-minute gap right here, right? Let's see what we get. Oh, perfect. We have a 1-minute gap right here. So possible IFG entry. Let's see what happens. Perfect. Beautiful inverse right here. So we would take this right here. Stop loss above either this swing high or this swing high up here. Either or is fine. And, oh, wrong one actually. Let me fix that. Short position. Stop loss above either this swing high or this swing high. We'll just do this one to be safe. And take profit at previous day's low, right? And then this 4-hour swing low would be our break even, or you could go break even after we take this low over here. All right, so let's place this order. So here we're risking 500 to make 800. All right, so let's see how this plays out now. All right, we could go break even now that we took that low. Beautiful. Just another textbook setup. Literally everything on the checklist was checked off. And here we did have to use our discretion because, as I said, 5-minute retrace was just unlikely. Obviously, didn't happen. We didn't get any retrace into the 5 minutes. No retrace into this 3-minute. So we just have to use our discretion and realize that a retrace to those higher time frames were unlikely. So we go down to the 2-minute. We had a nice retrace. We had a beautiful 1-minute IFG entry, and that was your trade right there. All right, I think I have one more example for you guys. All right, same thing here. Let's mark everything out. Previous day's high. Previous day's low. We also have this daily swing high up here. Now let's go down to the 4-hour. All right, so we're inside this huge 4-hour gap right here, right? So let's mark this out. So at open, we're inside this huge 4-hour gap. So we'll be waiting. Are we going to disrespect this gap to move higher up here? Or are we going to respect this gap to move lower to this ERL down here, right? So 2 narratives, right? Now let's see. Do we have any hourly gaps? Okay. All right. So really, we don't really know what's going to happen here, right? We're in this 4-hour gap, so we want to see what's going to happen first. So here on a day like today, I'm most likely to wait till 10 a.m. to really see what happens inside this 4-hour gap, right? We really don't know if we're going to respect this gap or disrespect it yet, right? Because we're in the middle of it. All right, so let's just wait and see. We're going to go down to the 15-minute. All right, so let's see what happens at open. All right, so already looks like we're disrespecting this gap. All right. So at 10 a.m., right? It's 10 a.m. now. What happens? We're respecting this gap. So where are we looking to move lower towards? This previous day's low and this 4-hour swing low as well, right? We have 2 draw liquidities to target now. And again, we got no entry towards London low over here. So now let's see if we can get a 5-minute retracement down to these lows over here, right? Beautiful 5-minute retracement right here. So let's mark this out. Let me delete this. So 5-minute retracement right here. Let's go down to the 1 minute. So we have no fair value gap created yet. Beautiful. We create this fair value gap right here. So another possible IFEG entry. All right. Now here, you could enter this right here, right? We have 2 nice displacing candles, so this would be a candle confirmation entry. Or we could just be safe and wait for this IFEG, which is what we'll do. Beautiful. Inverse this gap, another beautiful displacing candle. So this is a trade that we would take. Stop loss above this candle's high, right? And take profit at your drawn liquidity, the previous day's low, right? This is also previous week's low, I believe, as well, right? Let's check. Right? Yeah, this is also previous week's low. So strong drawn liquidity. Previous week's low, previous day's low, and then this 4-hour swing low right here as well, right? This blue line. All right, so let's place this trade. So here we're risking again 500 to make just under 1300. We get a 1 to 2.6 R. Now let's see if this plays out. We could go break even now that we took out this low. And beautiful, 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 beautiful delivery. All right, so that was the 4th example, but literally, again, same exact thing as always. Understand the higher time frames, which we did. We waited for that. We waited for this 4-hour gap to be either respected or disrespected to find the bias, right? Strong draw on liquidity. We had previous day's low in this 4-hour swing low over here. Narrative out of this 5-minute gap. Narrative out of this 5-minute gap right here. And super simple IFEG entry, right? So super textbook. Just beautiful, right? All right, so that's going to be all. I know it was a little confusing at first, but if you guys are going to backtest this and just review my TikToks pretty much, I mean, I go in depth with every single trade that I take. And I mean, yeah, you're going to have to watch this video over and over, and it's not going to click right away. It's not going to click right away, but continue to backtest so you will build your discretion. And this New Year's pretty much coming up, and holy shit, I cannot speak right now. Continue to backtest this model. You'll build your discretion on your own as time goes on. It's not going to happen overnight or after a few days of backtesting. You're going to have to backtest a year's worth of data. But, I mean, stay tapped into the Discord and continue to learn how I trade. It's so simple. And I guarantee you, once you guys start to build this discretion, you'll see a huge progression in your trading, a huge increase in your win rate. And other than that, see you guys in the Discord. Peace.